Medicare Part D is arguably the most confusing part of Medicare, especially when it comes to the donut hole. Stay tuned. Now, as always, if you have any questions whatsoever about Part D, Medicare in general, or health insurance in general, you can reach us at the number on the screen or in the comments below. Now, of course, there is no charge for our services, and we do release these videos on a weekly basis, so make sure to subscribe to stay up to date. And of course, please click that like button, give this video a thumbs up so we can get this information out there. All right, so today we're going to be talking about Medicare Part D, specifically about the donut hole or coverage gap. Now, you may or may not know that original Medicare actually doesn't cover prescription drugs. Now, there is a very short list of limited exceptions, for example, chemotherapy, injections that you receive in a doctor's office, or insulin if it's administered via pump, amongst others. But again, that list is very, very small. So the regular prescriptions that you take on a daily basis likely won't be covered. And that's where Part D comes into play. So Medicare Part D are strictly prescription drug plans. You'll pay an additional monthly premium to keep that plan active, and in return, you'll pay a reduced amount when you fill your prescription at your local pharmacy or mail-in pharmacy. Sounds pretty simple so far, right? But there are 4 stages to Part D, and that's where things get a little confusing. So stage 1 is the deductible. Like with other types of plans, the deductible is the amount that you have to meet out of pocket before your insurance begins to contribute to the cost share. Now, even though Part D plans are offered by private carriers, the federal government imposes limits or maximums, certain thresholds that these plans have to adhere to. And they change these guidelines on a yearly basis. So in 2023, the maximum deductible that any plan can have is $505. However, many plans will offer lower deductibles or even a $0 deductible, so that is to say, no deductible, to entice potential beneficiaries. Now, this may or may not work to your advantage. You will also have to take into consideration the monthly premium for that plan, and of course the co-pays or co-insurance for the medications that you regularly take. Now, Medicare is going to keep track of your spending, and once you've reached the deductible for your plan, you'll enter into stage 2, which is the initial coverage period. During the initial coverage phase, you'll be responsible for a copay or co-insurance for your medication, and the cost is determined by the tier of the medication. So again, things can be a little confusing. You have 4 stages and 5 tiers of medication. And the 5 tiers are: Tier 1 is the preferred generic, which are the most common prescription drugs. Tier 2 are just regular generic. They could be a little bit less common, perhaps, than Tier 1. They're still generic, but they may cost a little bit more than Tier 1. Tier 3 are preferred brand, and these are brand name drugs that don't have a generic equivalent. Then there's Tier 4, which is non-preferred brand drug. And finally, Tier 5 are specialty medications, and these are usually used to treat more complex conditions. Now, generally speaking, the lower the tier, the lower the cost of the medication, and generally speaking, as you move towards Tier 5, the costs do tend to get a little bit higher. Again, Medicare is keeping track of your spending as you approach the threshold for the initial coverage period. And in 2023, once you've reached $4,660, you will enter into the donut hole. So that brings us to the topic of today's video. Yes, we're going to be talking mostly about the coverage gap or donut hole. So once you enter into stage 3, you'll likely notice that the costs for your prescription drugs will increase. Now, this was much, much worse in years past. Luckily, in recent years, steps have been taken to remediate that. But even though things are much better than they were before, you'll still have to pay up to 25% of your prescription's original cost. So let's take a look at Medicare.gov to learn just a little bit more. So this page on Medicare.gov details costs in the coverage gap. So first, it's going to talk about brand name prescription drugs. So as I mentioned, you'll pay no more than 25% of the cost for your plan's covered brand name prescription drug. Now, although you'll pay no more than 25%, almost the full price of the drug will count as your out-of-pocket costs. And basically, those are all of the costs that Medicare is keeping track of. So that way, when you reach the threshold from the coverage gap to catastrophic coverage, which we will talk about in just a moment, it's going to help you get to that threshold a lot more quickly And the rates that you pay in catastrophic coverage are much lower than what you pay in the coverage gap. So this pretty much breaks down exactly why, even though you're only paying 25%, almost all of the costs are going to count towards what you're spending to get you closer to catastrophic coverage. So this is the example that they give, which makes a little bit more sense than how they explain it here. So if the price for a prescription drug is $60, and there is a dispensing fee, because there is such a thing as a dispensing fee, that gets added to the cost. So the total cost would be $62. Now you, or Mrs. Anderson, in this example, would pay 25% of that. So that's $15.50. So even though you, or Mrs. Anderson, are paying $15.50, a lot more than that is counting towards the total spending, getting you closer to catastrophic coverage. So the manufacturer discount is 70%. So $60 times 70% is $42. So that also counts towards the spending, even though you are not actually spending that $42. You're only paying the $15.50. So $15.50 plus 42, that brings you to $57.50, and that counts as the out-of-pocket spending to get you closer to catastrophic coverage and out of the coverage gap. So again, even though you're spending this, Medicare is counting this. Now, so for generic drugs are always going to be less expensive. So here's how generic drugs get calculated. So if you go to your pharmacy to fill a prescription and the price is $20, because already we're talking about generic, so it's going to be much less expensive, there's still that $2 dispensing fee. Mr. Evans, our example person, or you, would pay 25%. So $22, because that's the $2 dispensing fee plus the $20 cost of the drug. 25% of that is $5.50. So the $5.50 would be counted as out-of-pocket spending to get him out of the coverage gap, but none of those additional discounts in the prescription brand name drugs. But again, the prescription brand name drugs, much more expensive than a generic drug. Again, Medicare is keeping track of your spending, and once you hit $7,400, if you hit $7,400, you will enter into the final stage, which is catastrophic coverage. So if you spend this amount in a given year and you enter into the catastrophic coverage phase, your prescription drug costs will drastically decrease. In fact, they'll go down to 5% of the actual prescription's cost. Now, this is designed to help minimize your prescription drug spending should you have rather large spending in a given year, but of course, we hope that it doesn't get to that point. So remember, if you do notice that your prescription drugs have all of a sudden increased in price, then it is likely that you are in the donut hole, but always double check. Call your insurance carrier, call your broker, make sure that there are no errors because you don't want to be paying more than you actually are supposed to be paying. As always, if you have questions, you can reach us in the comments or at the number on the screen. We are licensed nationwide and there is absolutely no charge for our services. But before you go, please make sure to click that subscribe button to stay up to date for our weekly videos. And of course, please, please, please click that like button so we can get this information out there. Thank you so much for watching and have a wonderful day. Bye-bye.